All right, cool. Stream started. Um, Once that start, then we start. So, like I was saying, what we gonna talk about today is market timing and reading price action, and it's pretty much that's how I base my entries and exits. When I think it's time to cut different plays, when I think it's time to enter. Cube, I think that you start noticing like the what it was the last 15 minutes or so, you was able to actually like take scalps. And it's cool if y'all talk. It's all good. Okay. Yeah. Okay. Okay. So, majority of the times, the first 45 minutes, normally I'm watching the market. So, I got the spot pulled up right now. And the first thing I'm looking at the daily candle forming for the day. So, I think I talked about it once. Sometimes people have, where's the thing get on here? They have the regular candlesticks, you know, and I really don't use it. I just like the regular bar charts because that's what fits me. Like that gives me what I need to see. I don't remember where you go to change this on the desktop, but anyways, I like the regular bar charts. Um, just because I'm always looking for the opening price and then the closing price. Those are the two significant things for me once I start looking at the charts because I want to see where the price is starting at. And of course, if it's dropping below the opening price, then it's bearish. If it's trading above the opening price, then of course it's bullish. So just those two things, opening and closing prices, tell me a whole lot about the actual price action for the day. And that goes with the weekly too. If you go and you look at the weekly candle, then we see where it opened up starting, I guess this was Tuesday, where the prices opened up Tuesday. And as long as price action was trading above the opening price, then you know you can take long calls. Let's say let's say Tuesday close. Tuesday close it opened above the open price. Well, that warrants for you to take calls. And you can swing calls into the rest of the week until the price action actually drops back below the opening price. So one thing I used to do on a weekly chart is I'll just take a little line, horizontal line, and I'll mark opening price, 669 cents. I'll mark that opening price. So when I start scaling back down into my charts, let's take some of these boxes off. Okay, so when I go to the weekly, I mark the opening price. When I start scaling down into my charts, I can actually watch price action without having to memorize, all right, where we opened it. I can actually go and mark it and see, all right, as long as we stay above $600.69, I know that price action is going to be bullish and I can take calls. I can take calls as long as we stay above this. If it drops back below, I know the price action is going bearish. I can take puts as long as the price action stays below that opening price. Makes sense? Um, and that's how you do that. And you trade that when you're looking at the daily. You trade it throughout the week. So that's part of just reading candlesticks. That's the simple part. Um, Market timing. So the stock market for me, Central Standard Time is open from 8:30 and then it closes at 3:30. So that means I can watch two candles all day, two 4 hour candles all day, and decide whether the stock is bearish or bullish. Um, let's see. So this is Friday's opening 4 hour candle. This is Friday's closing 4 hour candle. So like when you see, all right, I'm waiting on a new 4 hour candle to form. These are the two candles that I'm watching. So you watching, well, I'm watching the opening price of this 4 hour candle, which we saw it open at 609. I'll mark this one and I'll just mark it white. It opened at 609.77. So the highs that it made was probably about $1 move to the upside. 610.79. So it made $1 move up, and then it made a little bit about $1 move down. So we saw that sideways movement all day Friday. The market didn't do much. You could play calls, you could have played puts above or below the opening price, and you didn't make any more than $1 move on profits. So once that 12:30 candle hits, we see the opening price right here, or the closing price, my bad. Once we see this 4-hour candle close right here, now we got a closing price. That means that the market agreed that, boom, we're going to close at 608. We're going to close at 608.44. And anything between 608 and 609 will be considered bearish price action, because why? This is a confirmed close candle. So anything in between here, you're gonna want to short it. You're gonna want to short it back down to the downside, at least to 608.44. So you'll be looking for the rejection here at today's opening price, back down to today's closing price in that 4-hour candle time span. So when you go to start zooming in and go to a smaller time frame, this is where you start tracking it. So once this 4-hour candle closed right on this one. So these are the final moments of that candle closing, going into a new candle, going into a new 4-hour candle, and going into close. So once it closes right here, this is my support line right here. Once price action started breaking down, which is where we, should have taken puts. We was too busy taking puts. I think, what was it? Microsoft and then Q's. We kind of entered spot puts late, even though it still ended up dropping in the close. But once that 4-hour candle closed, right here, this is now bearish price action. We're looking for the rejection at 608, and we're taking it to the downside. If anybody has any questions, you can feel free to unmute your mic, ask me. So, I don't want to lose anybody. It's a small group, which is perfect. That way we can go ahead and make sure we get question answered, we get it broken down pretty thorough. So anytime you guys have questions, feel free to reach out. So once we broke this price action, then we're taking puts at the reject and we're taking it back down. Lately, we've been doing $100 in, $20 out, just to get you guys programmed to take profits. Take profits, take profits, take profits. So even when we do have that big play, we're not looking to try to milk everything. We just want the money because we understand the compound effect of just taking profits consistently. We can take this reject all day. If it comes back up to 608 and drops back down, you take 20%. If it comes and retests, we grab it again, let it drop back down. I think we hit metal one day twice before it finally broke out, but this is what I'm watching. So we always have the first 45 minutes of the opening bell, which is normally the most volatile. Premiums are usually jacked up, or the bid and the ask spread is normally pretty far away. You might have like a 10, 15, maybe $20 gap, just because we're going to see prices. Here's opening bell right here, and then the first 45 minutes to be right here. So within there, we've seen prices actually shoot up, and then by the time that 9 o'clock hit, or the first 30 minutes of opening bell, it came back down and it sold off. And then this is where we start seeing the price action try to try to stabilize. After it dipped, we kind of seen the price action try to stabilize like right here. So this first couple of minutes, normally I'm not taking anything because it's easy to get faked out. Sometimes it'll run, sometimes it'll push up, it'll come back down to like this level right here, the opening price, and then it'll shoot back up. Sometimes it just bottoms back out. So normally I'm not taking anything till about 9:30, which is right here. If we see something to where the prices are just consolidating all day within a range, then I'm still not gonna take anything. If price action just trading right here and we going into 9:30, nothing's moving. 11:30, nothing's moving. Normally by 11:45, I have an alert set for 11:30, right before lunch. Normally around 11:45, you will see movement. And this is just my personal um, perspective on what I've noticed just over the years trading every day. From 8:30 opening bell to 9:30, normally you see a lot of fake outs. By 9:30, you should be seeing a confirmed trend. By 11:45, the market normally always pumps to the upside going into lunch. So 11:45, we actually seen a dip after prices didn't move. If I go to a previous day, here's 11:30, here's 11:45. We seen the move up going into lunch, and then we seen the consolidation. Another day, here's 11, here's 11:30, here's 11:45. So actually, this day, this is one of those days to where we just saw price consolidate sideways all day. And we've been seeing a lot of that because we get the gap up and then the price action just trades sideways for people that's trying to short it back down. But I'm just trying to show you guys 11:15, 11:30, 11:45 in the lunch. We seen the uptrend going into lunch. We seen the gap up here and the sideways movement. It kind of moved on that 11:45 to 12 o'clock. That is 11:15 going into lunch. Here's 12:15. So it always gets a slight uptick every time it goes into that lunch hour. Where is it? Here's 11:15, 11:30, 11:45. So it just didn't move. But if you get what I'm saying, open the clock, 8:30 to 9:30, you're gonna see a lot of fake outs and they're, people trying to anticipate which way the market's going. And then from that 9:30 on to that 11:30 time frame, that's when we're either gonna see the true trend, whether it's going to the downside or going to the upside. And then most of the time you're gonna see a small spike the last 30 minutes going into that lunchtime hour, to where you're going to see prices move kind of like Cube. You see the price move to the upside the last 15 to 20 minutes of trading. And that's normally a thing too. Coming out of lunch about 1:30 to 2 o'clock or 2:30, you normally see whatever the trend is, you normally see it pick back up around 1:30. People are coming back from lunch, activity starts to pick back up, and you will see whatever the trend is, it'll carry going into the end of the market. And then by 2 o'clock, 2:30, then you will start seeing a consolidated, and then you will see a pump. People are hedging, or they're grabbing calls or something like that right before close to pretty much grab their swings for the next day. I don't normally say it's the algorithm, but that makes sense that it just happens that way going into close. So what you want to watch is, you always want to pay attention to the daily candles, because the daily candles that's what's going to tell you how bad or how good the day was. Um, if you're swinging calls or puts or whatever, is the daily count is going to tell you what to expect going into the next day. So let's mark out a few of our daily candles. And a lot of this just comes from learning chart patterns, learning the strat formations when you see the 1-2s, the 2-1-2, and different stuff like that. I haven't memorized them, but that's helpful. I try to post chart patterns, trend line patterns. You just want to find out what candles actually mean or what they're telling you, so that way you understand what you're looking at and you can see what's going forward. So this is Tuesday, Wednesday. Okay. So let's start with Tuesday of last week. So we seen the price open at 524. And then we seen a big dip, and then it was bought back up, and then prices closed here at 524.76. So pretty much Tuesday we saw a flat day if you were trading it. So a week like this, of course, it tells you what the price is open, it dipped, got bought up, and it got bought up. People probably thought that it was going to continue to go down because we were trading back into bearish territory here. But if you look at it, this day could have been bullish. You see a big wick back up. Here's the opening price. Here's the closing price. So it did dip pretty good, but it was bought back up going into Friday. So it actually could have been a green day just because it shows strength that, okay, we did dip, but we didn't open as low as we could have opened. We could have stayed down here and opened even lower, but somebody's telling us that they want the market to continue going up. So going into Tuesday, that's what we saw. We saw the dip, we saw the price to get bought back up, and it actually closed bullish. So once we saw this, we had to get out of a consolidated zone. Reading the big picture, we had to get out of a consolidated zone, and we actually saw a breakout. So we actually saw this breakout here. All right. So once we saw this breakout, we saw the retest the next day. I got to change the color of these boxes because everything being white, it just makes the bullish counters hard to read. But yeah, all right, so we broke out here. The next day it opened, and this was the retest. It was bought back up, and we carried back to the upside. So this is a break and retest. It gapped up just to go ahead and burn any bears that was looking at, getting out. But this is something that I'm seeing on Google too, that I was posting about before we closed Friday. Once you see break and retest like this, of course, you're taking calls here. You could see a retest down here lower, but anytime we get outside this jailhouse right here, we're looking pretty good. So we saw movements up here, and then we saw consolidation. Now, my biggest thing is taking calls whenever we have a big gap up like this. Normally, I like to see this price action fill. And this is just a simple gap indicator that I have on TradingView. You can add it. It auto-populates red and green bearish gaps, and it just lets you know where buyers are stepping in and where bears are stepping in. Now, you can find these on the daily, but you can also see smaller gaps. You have to go through time frames. So 5 minutes shows what's happening, overnight. So as you can see, we have a gap down, but we still have this big gap up. This is something that you don't see on the daily. So at times you have to use smaller time frames in order to find more detailed um, chart analysis going into the day. This is one other thing that I watch for every morning. Once the market opens, how far did we gap down or gap up? Because now we're going to look for supply or we're going to look for levels of demand. If we're going to find supply levels on the 5 minute, then I'm expecting a rejection and prices to go back down. Now, something I was preaching going into the end of the week this week was if we gap down and then we're trading back up into supply levels, which is resistance. If we're trading back up into supply levels, prices are going to want to come back down. And I say 8 out of 10 times it's going to come back down eventually, as long as it doesn't gap up above a supply level. All right. So supply for this day was between 529.31 and 531.47. Prices open, and sometimes you just get it to where it just go ahead and dip down, and then it'll fill later on throughout the week. Kind of like this big level of demand here is doing. Gapped up Tuesday, and then it gapped up Tuesday and it's trading above here, and it still hasn't filled completely. We got a partial fill going into to close the week out. But once prices came back up here to retest the 531, the top of this supply level, it traded higher. But if we don't gap up above supply, once it fills, it's coming back down 9 times out of 10. Sometimes you just gotta have the right amount of time put on the contract to go out on further expiration dates, but it's coming back down to retest this lower level. So this is what we saw going into the week. We saw prices come up, it retested, and why is this locked? Okay, there we go. It came up. This is Thursday. It came up and it retested, and it actually broke out going into close. And then Friday we opened high, no gap up, no green gap up. Nothing shows us that buyers stepped in, and this was a clear indication for me that all right, we coming back down. So that's why I'm calling puts out the gate. Going into a day like this, if no new buyers are stepping in, then I'm seeing price exhaustion from here up to here. It's coming down. It might retest, but it's eventually liquidity. I mean, well, it's gonna need more liquidity to push back to the upside. So these are your buyers. These are your sellers. You go long probably about 2 or 3 days out just to avoid theta decay. Try to go in the money at least to 529 and let the price drop back down and just hold your puts until it finally comes back down to 529 and you made some money. Simple. There's no indicators, no RSI, no MACD, nothing but gaps and just reading candlesticks and price action. You looking on the big time frame, the daily, to see what the opening price was. You seeing what type of candle structure that we have going, which is here's Tuesday, we had the gap up. Here's Wednesday, you knowing that we opened here, we closed here, shows bullish momentum. Once we opened low and came back up, still showing bullish momentum. But the thing is, we're making a lower high. We came here Wednesday. This was our top, 533. Then we came here, 532. That was our closing. That's showing that prices are starting to get exhausted. If we go and we just look at different days on the daily, you see higher highs. But when candles are starting to stick real close together like this and not trending like this, and it starts consolidating, something's wrong. We need buyers if we're going to continue to want to push to the upside. We're going to need to see a green candle somewhere coming into Monday at least consolidate, but show some strength if we want to continue to push up and take out these highs on the Qs. Highs right now, it's around 539. So we're gonna need some more liquidity, which is down here. Buyers step in order to drive this price back to the upside. So as of right now, what we're seeing on the price action, this candle, as of right now, we're seeing a bearish engulfing. If I take off this gaps indicator, if I take off gaps, right now what we're seeing is we're seeing these two. We're saying this take out highs and lows of both of these weekly, daily candles. So once you see prices reject up here at the highs, and then starts taking out the weekly lows, then you know, all right, prices are starting to get weak. I told you guys, all right, we probably gonna start rolling over in the next week to the downside because we're gonna want to fill in this gap that we have right here. So bearish engulfing means we've taken our previous price action, and now we're gonna start looking for rejections around 532 to 532.97 and 529.59. We're gonna start looking for rejections here. So trading opening and closing prices bearishly, it can have a decent effect on what you're looking at when you start dialing into smaller time frames. Let's see. Somebody give me a stock to look at, just a random stock that you might be watching, and we'll go over it together. Type it in the chat, or you can unmute your mic and just give me a ticker to look at. GME. GME. Okay. Let's look at Gamestop then. Cool. I don't have anything charted out. Cool. All right, so zooming all the way out. Let's make sure I ain't got nothing, no drawings. All right. Somebody asked me about a stock. First thing I'm finna do, I'm finna look at it from a big time frame. 12 months. All right. All right, so 12 months. Would you say the stock looks healthy? Looking at it from a year-to-year standpoint, or does it look bad, or does it look consolidated, or what? Q, what you think? How does it look to you?
What? This is a really high with guys, but never went back up there, so something's up.
Cool. So, of course, we know at one point in time, Ron Kitty and everything was a big thing um, that stuck around for a bit, and we saw some dramatic price action. This was 2021. So, I can literally look at this and I can just remember the storyline just from looking at how the prices were trading. Ron Kitty era, the the hope that Ron Kitty would return. This was probably, we just didn't hear much about it at all, but maybe for a month or so. 2024, it got a little bit exciting because, you know, he returned after a couple of years, and, you know, he did a live stream and stuff. And then here we are today, 2025. So opening price of 2025, opening price. So here we are, and it's bearish so far. So right now, GameStop is fighting selling pressure. $31.76 was opening price. Well, actually, it's 31.84, but close enough. Not if you get the picture. We're trading against selling pressure. You see back here, here, well, actually here, it actually almost closed flat. But here, it trades lower, trades lower, trades lower. It's just January, going into February, so it still has time to retest opening prices and actually go higher. Once prices get back above 31.85, then you can start looking for momentum, or you can just go long if you have the capital and choose $32 for your strike price and go long. And whenever $32 hits, then your premium should start printing or going in the money as it climbs higher. Um, but as of right now, this is what we're seeing. We're seeing prices trade below opening price. We're seeing selling pressure. We're seeing weakness. Buyers stepped in this last year at $31.24 and $17.30. So now what that tells me, year to year, well at least last year, buyers held here and then buyers closed here. So now we're scaling into the 6 month. So once you see the yearly, well, the 12-month candles, now you can start zooming into the 6 month. 6 months give me the projection, the opening closing price for January through June, and then after June, I'm looking at the second 6 months candle for the rest of the remaining year to see, all right, from June, July to December, are bears stepping in or are bulls going to continue to take over? So here's the first 6 months. Here's the second 6 months. What happened? The first 6 months, here we are opening, and we closed at $24.61. Going into the second 6 months of the year, prices open just slightly below the closing price here. But once it got back above that opening price, bulls stepped in because they closed bullish the first 6 months and it continued to push up in price. So now we're going into January in the beginning of this year, and we're trading within a bullish area. So you can buy the dip, but you want to look for some type of structure going into the rest of the year. So we know the past 6 months, the bulls closed here and they closed here. So now I'm really dissecting the chart. I'm really, really breaking the chart down because this is due diligence. I'm really trying to find out what the stock is doing, how healthy it is, where my buy prices are going to be long term, what I want to do with this stock, and how I'm looking at it. So we're breaking it down, the first 6 months and the second 6 months. So now we really can go, I can skip all of these because I'm not really looking for the quarterly price action, not looking for 2 months, monthly. Like, I got the big picture of things. So once we go into the daily, guess what? We got a little map. I haven't added any indicators or anything to it. I'm really just looking at price action. I'm looking at selling pressure. I'm looking at buying pressure on the charts. Here's some supply. It didn't really trade, or it didn't gap up. We may have some gap ups in the hourly charts that gave it some movement, which we haven't. Um, no, we haven't. It's just trading off pure price action because bulls stepped in and it's just kind of holding up. But guess what? Since it hasn't had any new gap ups within this 4 month, within these hourly time frames, prices always try to come back down. This 3 hour chart, 4 hour chart too, shows a gap down. What day is this? So this is 110, January 10th. Shows a gap down, and then we had some more selling pressure that followed. So we could fall more, and then buy point would be down here at $24.65, or it could form some type of support that it has at the moment. Yeah. So this is something that I kind of ran across that's new. This rotated rectangle, pretty dope. Makes it easy visually. Like you want to make everything as simple as possible for you to be able to look at a chart and determine what exactly it's doing, so that way it don't take you all day to make, a move on the chart. Majority of the time while trading hours, I'm at work, I'm delivering mail, I'm walking, my phone in and out of my pocket, all of this stuff. So I have to make it easy for me to be able to determine what's happening. So you go use that rotated rectangle, and here you are, you drawing you a visual support level right here. No GAN fan, no nothing, just straight candle structure, price action. So you don't have any like just strong buyers here yet, but you do have a healthy trend right here. You have a bounce, a second bounce, and a third bounce at kinda at these lows, but you're forming a trend under the list. Then if you're looking at this, all right, so I'm just gonna take these two candles right here, which are close to my highs, but we saw that it rejected around the same price range. So I'm gonna take my rotated rectangle and I'm gonna draw a little bit more. Boom. So now I have a visual on a bigger spectrum just to show me what prices could do. I know that if it comes back down here within this white, shaded area, if I'm going to the 30-minute chart, that's where I like to do most of my support and resistance picks. We know that if it comes back in this white box, we're looking for a rebound back to the upside. If we know that it gets back up here around this $34 range, we're looking for a rejection. But we have to keep in mind, we have this supply zone right here. So when we zone back in, it's not showing as well, but it's still up here. You're looking for a rejection around opening price. So once you start breaking this down, you're looking for buy zones. Here you got one right here where buyers stepped in. That's probably why it had an overreaction in the dip, and then it bought the dip up, and now it's probably trying to hover around here before it makes a move back up. It might need some news. It might need a catalyst. Um, you never know, but all you really can do is buy and look for a stop loss. If it breaks below this white shaded area, that's your stop loss. You're gonna start looking for weakness. It may drop back down here to $24.61. Since this is a buy zone, it'll come back up and reclaim trend, trade back up. But the thing you have to do is you have to find a new trend. So if you're looking at this, I might say that my second trend would be somewhere like this. So here's my second trend. Boom. So I have the trend starting here. I have a retest that gives me some confirmation. This is where I would start drawing. Once I see this retest here and then it trades back up, I would have started drawing my trend on this retest, and then these retests here will be levels that I will buy. So if this trend breaks and price action comes down below here, you look for maybe a dramatic reaction, and it comes back down to trade off of here. Buyers are here, buyers are here. You'll want to buy this dip on the way back up. Reclaim this trend as long as it hasn't gapped down, something like Apple's been doing. As long as it doesn't gap down and this is just an overreaction, you sell by the dip and you let price come back up and you reclaim the trend back to the upside to see if we have enough liquidity down here to now drive the price back up to retest this supply zone at $31.95. So this is just simple chart breakdown, acknowledging buying open and closing prices, acknowledging bigger candles to see whether people are actually buying or selling the stock, um, to actually break down what you want to do. And if you don't have this, if you're looking at the 5, the 15, the 30, and that's how you're trading, you're never going to see the bigger picture. That's all trading is. It's breaking down the stock from the bigger picture and then dissecting it all the way down to smaller time frames so you actually know where you're going. It's your map. So once you go back to the daily time frame, oh, you're welcome. You're welcome. This is what I'm here for. But once you go back and you look at the daily time frame, you get a picture. Like this is what charting gives to me. This is what stocks. This is what it is to me. Like I like to draw. You know, I'm decent at drawing, but when I'm drawing my charts, I like for my charts to make sense to me because I want to know what I'm looking at. I want to know where I'm putting my money at, and I want it to make sense so that that way I'm confident and I'm not questioning whether I'm doing the right thing or not. Sometimes, hey, I don't have enough time to really just break it down for you guys when when I'm giving you quick due diligence on it. But if I'm actually going through and looking at, which I told Q a couple times and a couple other people, if I had time to just sit and trade from a computer all day, bro, things would be a whole lot different because I have multiple monitors. I can look at the chart and stuff like that. But I still try to be as accurate as possible when I'm giving you guys due diligence from my phone. But now, you know, I'm giving all you guys the gems so that way the more people that understand how they're trading, the more we as a community can make money. You know, I like giving you guys plays that, that make money, but I want you guys to be able to fish and make money and understand what you guys doing too. Y'all don't have to rely on me. Just understand what you're looking at, and it don't have to look. Your charts don't have to look like mine, but don't get sucked too much into the RSIs. Don't get sucked too much into the MACDs. Um, don't get sucked too much into the Bollinger Bands and all these indicators. They're nice to use in Confluence because if you have a RSI showing that it's oversold, it's below 30, and it's reaching this right here, then that gives you more confidence to buy on the dip because the RSI is not lining up with what you see. Um, you buy to the upside and then you start looking for the RSI to retest 50. Once it gets up to 50, now you're saying, all right, the RSI reset is back up to 50. Here we are retesting the old trend level. Do I sell or do I hold? You watch it. If the RSI breaks above 50 and then it comes back up and retests and it wants to push up more, then you're gonna get you start watching your RSI for the 70 um, movement, and 70 might line up to be here. So you want to understand price action to make a good example of confluence to be able to see how everything lines up and how everything falls in confluence with one another. So making sense.
Yeah, it makes a lot of sense.
Cool. Um, Somebody throw another ticker out. Give me one more. Some that you watching, some that you might be interested in, some you seen on After Hours that you might be. Palantir. Something told me Palantir was coming. Cleared the charts. Perfect. So Palantir is crazy. It's a very, very, very different mover. I I tried to short it and yeah, I made a big mistake once or twice. It just doesn't come down, and it's a fairly new stock. I remember when Palantir, first dropped. You have shares too. Hey, shout out to the shares, man. If you got shares in Palantir and you holding, keep holding because the stock look like it ain't going nowhere. It's finna take out highs pretty soon above 85.22. What that is, highs 84.80. So it's finna take out highs pretty soon. So we definitely want to watch this. So here we are, 12 month chart. As of right now, price action is bearish. I mean bullish. Here's your opening price, and it's pretty close to last year's closing price. So here we are. Last year's closing price was 75.63. So let's mark that. Look at last year's opening price, bro. $16.96. So like $17. From 17 to 75, bro. If you was buying down here, like this is every trader's buy and hold opportunity. Like this is your dream to buy down here and just have it skyrocket, you know, all the way up to $75. That's wild. But here we are. Anything in here is just gonna be a buying opportunity. If prices happen to dip all the way down between 75 and 96, snatch up as much as you can. Because the worst thing that can happen is it consolidates between 16.96 and $76 over the next couple of years. Um, or if it dips, which it has down to 63, you buy the dip, it comes back up, take out highs, and it's $100 to $200 stock, in the upcoming months. Perfect. We got the 12-month prices. Right now we're trading at 78.98. Now we start looking at the 6 months. So we're gonna watch the first 6 months, and then here we are over here in July. That's gonna be our second watch for the remainder of the year. Like I said, prices do drop. Anywhere in here is gonna be buying opportunities. Anywhere in here. So now that we have those, we go to the daily and we look at it. Now the daily has one, two, three, four gaps within last year. Four gaps. I don't know when it's gonna get filled. It may never get filled because the productivity, the cash flow, the earning reports, the guidance, all of this stuff just might be too good, and the stock is still underpriced. I haven't looked at the banks and seen what type of ratings that they're giving it. It looks like the next earning report is in 9 days. Um, every year it looks like they're beating. So of course, great company, which is why these aren't being filled. Doesn't pay a dividend. Income statement, revenue looks good and is growing. Every year it's making more money. And that's what you're looking for long term in the stock. Companies making money. Um, all good performance. Strong buy as far as the technicals go. It's a neutral. And the only reason why it's neutral is just because of this right here. They can't tell you when it's gonna feel or if it's gonna feel. It's just that it's going up. So Looking at this, I would want to chart this out from a daily perspective. I would want to go no lower than that. So, crazy thing. Everybody brain works different. This is something I used to do. Invert the scale, look at it upside down. Why I do that? Because sometimes you just see stuff different if you turn it upside down. You have to play with your brain sometimes just to see what it can see if you look at it different. So use the rotated rectangle. You find your trends, and you, like I said, you get your map. You make sense of what you're looking at. So we got a trend there. We have a trend here. I don't know how many of you guys actually tried inverting your charts to see if that helps, but sometimes I find trends that I don't see when I do this at times. And then you can have another trend right there. All right, so cool. Once you get that going, reverse it and send it back. So right now we have a long-term trend. We have a medium to short-term trend, and we just want to watch and see where prices are gonna line up at. That's a big move in a year, bro. Let's get back to it though. That's a crazy move. Um, Looking at this, here's your daily. I probably want to look at the weekly since we closed on this one, just to find more of a stronger trend. All right, so boom. This is just like trend lines, but I'm just using these rotated rectangles just because, once I go into the 15 minutes, it makes more sense when you go into the smaller time frames. You start seeing it trade, and once you start seeing it, you like, all right, hey, we into it. Let's look for some weakness because this is the retest of a trend. Now, next time that this open, just because this weekly candle just closed. So this is the first time that we got here and then we got here. Anything that breaks above here, then we're looking for the retest and the move to the upside. But as long as we stay within this trend here, the next retest of it, you'll look for some weakness. Anytime it gets within here, you're looking for it to come back down. So let's turn on gaps. And on a 30-minute, it shows a gap here. And then it shows a gap here. So what you're watching right now, you're looking for time. You're trying to find the trading time frame to see how it's going to line up. So we're going to watch for rejections here, and then we're going to watch for calls here. Whenever this time frame lines up, whether it's a rejection up here or we're coming straight down and we're looking for buyers to step in here, like I said, anywhere between, you never know when it's going to come back up. Anywhere between 76 and $16, which is last year's opening price, this is all bullish. You scale out and you start looking for different patterns. You see this V-shaped recovery here, which means buyers stepped in and bought it like super, super quickly. But then you also can see this big consolidated level right here. And it's not perfect, but this is just what you're looking for. You're looking for big levels of consolidation Anywhere in here, you really don't want to buy. I'm not gonna say you don't want to buy. It's just in the middle, so that means it gives you an opportunity for the trade to go against you or for you to make money. It's a 50-50 chance. Anywhere, anytime you're buying something in the middle, because if it consolidated here before, that means it can consolidate again. So either you're looking for the dip underneath this consolidated area to buy back into consolidation, because once again, here's your buyers right here. You're looking for the break, the buy, and the move back up. And the move back up into consolidation. Or we could see the dip down here, the break of structure, and we might fill this gap right here. This small gap, details. And take this, and now once a structure is broken, you're looking for either a retest the trend and then a move back down, which could lead to prices coming down here, or you're looking for it to reclaim the trend, and trade back up into here. But once again, if we come back up here, we're looking at lower highs. I'll have to try this because sometimes I just can't get what the chart is saying. The chart's gonna tell you exactly what to do, but we're gonna make lower highs if we come back in here and retest these levels. So a lot of people, you get the dip, and then you start seeing prices come up here, and people start buying somewhere up here, and now isn't the time to buy when it's up here, when it's retesting the top of the trend. The dip is below consolidation. It's either the bottom of consolidation or below the consolidation. So this is just what we look for. You're trying to find the dip, you're looking for the angles, and you're trying to find the trend. You're looking for where buyers are, which is here, which is here. You got a ton of them here, but until the structure actually breaks to where this looks like it can happen, you just keep buying the dip, because people thought that it was gonna fill on this bigger time frame. People thought that these were gonna fill too. Never filled. Never filled. So once you start learning chart patterns, then things start making sense, because you start lining out these buy boxes, and then you start seeing stuff like pennants, bearish pennants, bullish pennants, and bull flags, and different stuff like that. You're looking for the breakout of this trend, the retest of this one, and the move to continue up. Or if you break this trend, you take it out, and you look for the next pattern. Here's the next bullish pattern still. If you lose this one, you take it out. What's the next trend look like? And then you just keep finding the actual trend on the bigger time frame to find out where your buy points are. And this is just how it's how you read candle structure. And it starts to make sense to you once you understand what you read. It's, that's all it is. So I hope this makes sense to you guys, or it is helping out with how you chart, and possibly going into the upcoming week. Like, honestly, shit, I want to turn all y'all into analysts. I want to turn all y'all, and I want everybody to be able to call signals with the best of them. I have helped you understand Palantir a little better. Hey, that was my goal. I was telling somebody a good mentor is they're gonna tell you how to be better than them, not just feed you enough so you can barely stay afloat. Like, I want all you guys to be just as diligent as me when it comes to this. So I gave you guys a little short lesson on timing. Look for the first hour for the market to settle. You look for the trend from after that first hour going into lunch. You're looking for a trend. And then that lunchtime, you're looking for some consolidation or the market to slightly move down. And then going into um, the last little bit of the hour, you're looking for the continuation in the trend right before it possibly gets bought up going into close. And then candle structure, you're looking for 12-month, which is your yearly candle. You're looking for your yearly candle. Then you're looking for your 6 months candles because you're going to find the first 6 months of the year, you want to see how it's performing. And then once that 6 month candle closes from July into the rest of the year, you want to find out if it's a buying opportunity or not. In this case, anything this whole year is a buying opportunity for Palantir. GME, Q, yeah, I'll call it a buying opportunity. Anything this year. But you're looking at your 6 months candle. You're gonna watch how it performs this first 6 months, the next 6 months, the last 6 months of the year. You're gonna see whether you want to continue buying. You want to see whether it's gonna open and trade above its opening price, and see if you want to continue to hold from there. And then once you get that, you go to your daily and you find your structure. This is for your day-to-day trading, day-to-day, weekly trading. You got your gaps indicators on. You're looking for sellers. You're looking for buyers, gap ups. All of these things are just things that you're going to be checking for on a day-to-day basis. And once the bell actually opens, you're looking for minor details day to day. Remember what I was telling you guys. Sellers, it gapped down, it traded back up into supply, sold off, gapped down again, partially traded up to into supply before selling back down again. Sell off. You had a gap up, still not strong enough from where we came from. So it filled, it sold off. You just read the story. It traded into your trend, got bought up. So here we are now, looking for buyers here. Buyers here is showing strength. We might see it consolidate sideways before making the move back up to that 31.24 and fill the rest of this gap right here. If it happens, Q, I want some of them profits. I want to see them profits.
For sure.
Cause if it happens, I just gave you the answer right here. 31.95 is grabbing liquidity. As long as it stay in this trend, it's coming back up. We filling this gap this upcoming week. I want to see the profits. So, um, they go for you too, Neat. If Palantir hit and you buy the dip and that thing come back in here, or you short it up here and it come back down, I want to see the profits. Or if it break out and take another rocket to heaven, you seen the breakout happen, you took on a retest, you took it on a retest, you see breakout, retest, boom, going up. I told you guys Google. Look at Google. Google been respecting that trend all freaking week. And I drew this based off of, it was off the daily. But since then, it's breached it a few times. So it's trying to create another trend, kind of like an uptrend. When I start seeing too much noise like this, you see it respected, then you see it break it, then you see it respected. I'm gonna start going to the weekly charts to start getting some of that noise out there. That's what you want to do. You want to look for something that's as fluid as possible. So once this monthly candle closes, wherever it closes, then that's when I'm gonna readjust this trend right here too. Because right now it's just kind of noisy. Every week we seeing something different. We see a retest. This week we see a break. I want to just kind of wait until the monthly candle close and we go into February, and then we can readjust it from there and see what's the future moves for Google. So I had drew the trend for this week. Like I said, we respected it a few times. Here's the where I would start drawing my trend at once it rejected here. If we would have shorted, once it got in there, it did break out a little bit, but if we would have shorted in here on the retest, you probably would have made a little money as it came back out of it. Retest came back out of it. Grab some liquidity. Now it's coming back up, trying to break out again. It's it might respect it, it might not. Um, got a big gap down here. I'm not sure when that's gonna fill, but the market looks bearish. So we just have to see. I ain't gonna say the market looks bearish. The market look like it needs to pull back to grab some more liquidity. Let me say that to grab some more buyers. So we'll just have to see how Monday opens. But as of right now, the market looks like it needs to pull back some. So understanding candlesticks. Go ahead. I mean, yeah, but no. Sometimes I don't even draw the game fan. I mean, unless it's just something that I just really, really watch. Like I watch SMH, but I was just trading SMH this pure price action. Well, not trading it, but watching it based off of Nvidia and other semiconductors. I mean, I'm just reading, just like I said, simple price action. So the game fan is pretty much for, like I said, if I want to show somebody something daily, like I show you guys the pre-market analysis every day and I post the screenshots. That's what the game fan is for, just so you guys can have a visual for it. But outside of the game fan, if it's just something that I'm looking at to track, like I track ETFs every day. SMH, XLY, XLV, XLK, like all of these are just different ETFs for different sectors. This is the healthcare sector. So since I'm looking at the healthcare, all right, Vikings, see you later, bro. Like I said, it's recorded, so anytime you want to tap in with it, it'll be on my YouTube channel too. So um appreciate you for tapping in, family. You're gonna make some money next week. But yeah, healthcare. If I'm watching Eli Lilly and UNH and stuff like that, then I'm going to look at the healthcare sector to see how it's performing. If I'm looking at Apple, Nvidia, Microsoft, I'm going to look at XLK, which is the technology. I'm seeing how that's performing. How much strength does that have? You see it consolidating a lot. So you might see some stocks, you might see Apple go up, Microsoft go down. They keeping the stock balanced. Since Apple's so low and Microsoft is so high, it's balancing it off. And Nvidia is balancing it off to show you, we're gonna need the whole sector to act as to correlate together in order to push up. SMH, Nvidia, AMD, different chips. You see supply up here. So if it's trading this high and you trying to buy Nvidia calls, why? The ETF is showing you weakness. It's showing you that is facing resistance. So why are we buying Nvidia calls when the actual semiconductor ETF is struggling, need to come down? The answers are in the charts and it's in the different. You just have to know what to watch and how to read it. So um, if I'm a draw the game fan, then yeah, I'm gonna go and I'm gonna post it to y'all. I just come over here, uh, find a quick trend, and then I'm lining it out like this. So that way I can go to the daily. If I find another trend within the daily, then I might add a game fan here. So now that I have a weekly game fan and I have a daily game fan, normally I'm not going no lower. I'm not drawing game fans on 4 hours and stuff like that. Reason because it's just those trends can be broken too easily. So I'm looking for the higher time frame trends because those are more solid. And when I scale into the 30, then it start making sense. All right, I got a trend here, a trend here. I got support, but I draw my support on the 5 minute just because it's a little bit more detailed. But I got support here. That's the wrong one. Support here when it, there you go. Resistance here. Because here we have the top of supply, it rejected. Here we have support. Um, we have an unfilled gap down here. So look where it lines up. Follow it over. Let's add a horizontal line. So you have an unfilled gap down here. You use price, track time, and you line it up with, something like this. You watch for a bounce here. It fills because you have buyers over here. It bounces up. It might gap down sooner or later. If it gaps down, then that's going to show you that, all right, they selling out. They trying to get prices lower here to fill this gap. You just read the price action day by day, and the more you start understanding, the better you can foresee what's coming in the market. You know exactly what to do when you start seeing different stuff happen, and it becomes routine. So, did that answer your question, bro?
Yeah, that's good.
Cool, 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 cool. So that's how I do the game fan when I'm pointed out. I'm looking at bigger time frames, and then as I scale in, if I see another trend, then I'll draw it on the daily or the weekly to get a more of a solid trend. And as you can see, ARC was one of them because it was going crazy. Um, you see how it get bought up here. It hit 52-week highs once it traded above here, and all of this, everything above this trend line right here is exhaustion. Even though it gapped up, it's still getting exhausted because it's pushing 52-week highs. And here's your 52-week highs up here. So now that it's going straight vertical, I'm gonna start looking for some profit taking, and I'm gonna start trying to see where it could possibly come down to. And that's where you can find like you can go on your weekly chart and you can start looking for a trend to draw out. And if it's too vertical, I start looking for a smaller time frame just to see which one looks the best. So maybe something like this. So once you see that on the 4 hour, I'll draw one more just in case that breaks and find the next trend just so I can be ahead of the game. Chess, not checkers, right? Rotated rectangle. That's what it's called. But, I got another 4 hour trend drawn up, going down to my 30 minute. We see it breaking trend. We want to see if this reclaims or if it's going to reject and it's going to push down to the next level, which would be around it's like 61 or so. And you just keep finding the trends. If Tesla have a bad earnings or coin comes down or something, because those two stocks majority makes up, ARC right now. If one of those start tanking, then ARC is gonna come down with it. If ARC gaps down, then we can see Tesla or coin or both, Roku too. I'll see weakness because the ETF is starting to suffer. So it's a lot of tricks that you can take into the market that actually helps you and shows you, gives you an advantage in trading stuff. I took Microsoft puts because I seen XLK getting weak. But because XLK has this huge area of demand right here, Microsoft came right back up. But we took it into the beginning phase of this gap down. I mean this gap, but we took it up here and then we rolled the price action down until it started filling the gap, and then you take profits because at any time it can get bought right back up. But we probably need to seize another one of these because price action traded up here and then eventually exhausted and came back down. So that's why we're seeing the market trade sideways because it's trading between a supply zone and a demand zone. So stick with me, family. I'm gonna teach you guys, everything I know, so we can all make this money together. You feel me? So I ain't gonna hold you guys any longer. I'll do a watch list tomorrow afternoon, and I'll do like a YouTube live, and I'll probably like throw the link in after hours or something, just to get everybody engaged and stuff like that. But you guys, I'm gonna take all the time in the world with y'all to make sure y'all get what's going on and be able to get your own plays and make your money and everything. Cause I want to see y'all. I want to see y'all eat, man. So I'll tap in with y'all a little bit later, man, and we'll get to it tomorrow.
Yeah, thank you.
No problem, no problem.